Shares of Intel taking a leg lower in today's trade after announcing a new stock sale. The company said it plans to offer $15 billion worth of new stock in a bid to secure its place in the AI race as the build-out continues. Joining us live to unpack this and more is Robert Schiffman of Bloomberg Intelligence. Thank you for joining us.
Thanks.
So how do you see this move? Is this a sign of strength, or do you see this as maybe them rushing to get the cash before the window closes?
Well, from a bondholder's perspective, it's a home run. The sentiment in this space has transitioned daily from panic, there's way too much money being spent and everyone's going bankrupt, to euphoria, is you can't pour enough money in, fear of missing out. Trades like this suggest that spending is going higher. I think we all know that. It's going higher in size. The question is it financeable? And I think that this proves there's so many triggers for these hyperscalers, semiconductors to pull, that the money is there to build out these systems and for success probability to be much higher than what I think is even baked in right now.
So Intel says this is an AI opportunity, but Nvidia still dominates the market. Realistically, what is Intel's path to gaining a meaningful market share?
Well, the pie of technology revenues is enormous, and it's growing bigger.
True.
And there's room for many to jump in the pool and have fun. So Intel's coming at it from a different perspective, from a CPU perspective, but there's huge demand for CPUs. Obviously, GPUs cost a lot more and much more higher margin, but Intel is taking a two-way track. They both make their own chips for themselves, and they're trying to build foundries to make chips for others. And I think if the type of demand that we're seeing in the semiconductor market continues, their factories, which right now are being built and people thought were going to be empty a year or two ago, are going to be churning out chips over the next handful of years.
Talk a bit about the leadership of its new CEO, Lip-Bu Tan, and sort of how this fits into his kind of broader sense of where this company is headed. I think when he got the job, there was some concern. Would he continue to focus on both of those things? Should it just be on chip design versus making chips? How satisfied are you with kind of the strategic direction that he's laid out for this company under his leadership? Well,
I'm a credit guy. I'm pretty happy that the balance sheet now has stabilized, that they've got access to tons of capital. You know, he's brought in a lot of friends. They have investments from Nvidia, SoftBank, and, you know, the small little entity called the U.S. government owns 10%. So he's done a great job of building core strategic investors. On top of that, if you look from an operating standpoint, they saw a little bit of the future that others didn't see. And that's why demand has gone up so quickly that they can't build these factories fast enough. Take a look at their levels of success. If you're an equity holder, what have they done? The stock's up 400% over the last year. That's pretty good. You know, I don't think there's a lot of concern there. And from a bondholder's perspective, now they've basically just raised financing that will probably take them through the next 2 years of funding needs, including having to refinance their own debt. So I think if business continues to improve, it's a home run again from both an equity and a credit perspective.
You mentioned Nvidia a moment ago. There was this FT report this morning, Nvidia working with some Wall Street companies on a $500 billion financing deal. Amidst the swirl of concern about circular financing and all of that, how does that deal strike you, the reports that we got this morning?
I think people should be jumping for joy that this amount of financing is around. You know, there's all these questions about if they build it, will they come? The reality is the demand has already come, and now they're trying to build it. So you need a lot of money up front. These companies don't have enough free cash flow to finance it, so they've borrowed a lot in both public and private markets. Now you're seeing equity being raised. We saw it for Oracle. We've now seen it for Intel. We've seen Alphabet do it. Obviously, with SpaceX, we're going to have Anthropic and OpenAI issue equity. So what does this mean going forward? I just think, again, that the opportunities here are so great across the board. People want to know, like when I talk to traders on any given day, they want to know how to make a basis point in the next hour. And what I think we need to talk about is how you make 100 basis points over 10 years. And I think it's just a matter of perspective. If you're patient, particularly from the bondholder's perspective, this stuff is all financeable. Having a pool of another $500 billion of capital should make people feel a lot more comfortable rather than concerned.
You sound very bullish, actually. You said we should be jumping for joy. I, by the way, liked your analogy earlier of swimming in the pool.
Yes.
I would really want to swim in one. But we have Torsten Slok today earlier, for example, saying that the AI capex boom is only showing up in the seller's margin, not the buyers. And the big risk is the concentration, which David also alluded to. This whole, what was the word you said?
Circular financing.
Circular financing, yes. How do you respond to that?
Yeah, I've sort of used this Robin Hood term before, stealing from the rich to give to the poor. In this case, it's stealing from the very rich to give to the very wealthy. So listen, it takes time to build a data center. You have to start with a foundation. The foundation is literally the physical infrastructure, and the most important part are the chips. Nvidia is the one who's making all the money right now. On the back end, it's the hyperscalers that are going to be collecting the money after all these systems are built. So it's just a time shift in terms of capital. Nvidia is likely to generate $200 billion of free cash flow this year. Probably $250 billion next year. What would you rather have them do with it? You want them just to buy back a lot of stock and then everyone say that this is a 2% grower? No, they're investing in their ecosystem. They're helping everybody else out. I don't think that creates a domino effect. I think what that creates is this inflection point that once stuff is built, the amount of cash that you're going to see flowing through the system is going to be enormous, and they're going to make their money back in spades. And remember, it's not just Nvidia. The type of names that are being listed in this capital raise are the biggest private equity firms and credit firms that are out there. So I think it's really the smart money that's chasing after more smart money.
You mentioned Uncle Sam taking out this stake in Intel. That's been several months ago since that happened. How do you think about that? And did that portend for you this happening with other companies? Did it make you feel uneasy at the time? And sort of how have you processed what happened there and how it's playing out?
No, getting free capital doesn't make me feel uncomfortable at all. That being said, remember, this wasn't so much a direct government investment. There had been a program where they were giving out grants and loans that they converted into equity. So I think the concern was that, well, if the government's now going to interfere with this, how are they going to actually run, a standalone private/public business? And the reality is all it did was provide a boost. It helped their balance sheet out. It took basically a loan that now they don't have to pay back. At some point now the government can sell their stake for a huge profit and say what a great job they did. So the next time around when they come to help and support somebody, I think people are going to see it as a positive. When it first happened, there was a lot of concern. I'm just telling you, I think that the amount of concern that exists is way too high relative to what we're seeing in terms of AI monetization, demand, and supply characteristics.
Robert, great to see you. Thank you very much. That's Robert Schiffman joining us here from Bloomberg Intelligence on set in New York.